Welcome everyone to this Oceanobi deep dive. Today, we're exploring account aggregation APIs, specifically building with PSD2, Open Finance, and FTX. For developers in fintech, this is one of the most important topics as access to financial data becomes central to innovation and user experience. Account aggregation, once niche, is now a core building block for modern banking. Whether you're working on personal finance dashboards, SME accounting tools, or credit scoring engines, the ability to integrate financial data across multiple institutions is no longer optional. It's expected, but it's not straightforward. Across different markets, there are different standards, different authentication flows, and different schema quirks. In this guide, we'll walk through how to approach aggregation APIs under PSD2 in the EU, Open Finance in the UK, and FTX in the US, highlighting technical nuances and data normalization challenges. The regulatory frameworks. Let's begin with PSD2 in the European Union. PSD2 requires banks to expose APIs for account information services, AIS, and payment initiation services, PIS. From a developer's perspective, this means implementing OAuth 2, but also handling consent flows, redirects or decoupled authentication, and strong customer authentication, also known as SCA. Payloads are JSON-based, but beware, schemas differ bank to bank. Next, Open Finance in the UK. Building on PSD2, the UK initiative, often called Open Banking or Open Finance, introduces stricter API specifications via OBIR, the Open Banking Implementation Entity. Developers benefit from more standardized APIs, richer datasets like pricing and product info, and centralized conformance testing and certification. Finally, in the US, we have Financial Data Exchange, or FDX. This is an industry-driven standard, not regulatory. FTX provides a common API specification for data access, often token-based authentication like OAuth 2 with JWTs, and supports both retail and business account data. Adoption is growing, but in many cases optional, depending on the institution. Technical challenges in aggregation. Let's shift to the common technical hurdles. First, authentication and consent. In the EU and UK, APIs often enforce multi-step consent flows and SCA, which might include user redirects or extra verification steps. In the US, token-based flows under FTX can be smoother, but because each bank may have its own specific rules, you end up writing modular OAuth 2 clients that adapt to each case. Second, data model normalization. Even where PSD2 or OB aim for JSON schemas, fields like transaction categories, balances, or pending transactions don't always align. FTX has its own shapes and types too. Without normalization, your downstream systems see inconsistent inputs, and that causes maintenance headaches. The usual remedy is to build a canonical data model, mapping each bank's variant to a standard internal schema. Third, rate limits and throttling. Many APIs limit how frequently you can request data, especially when dealing with historical data syncs. To handle this, build caching layers and incremental syncs, fetching only deltas rather than entire archives. Fourth, error handling and retries. You'll encounter timeouts, consent expirations, or intermittent network issues. Best practice here is using exponential backoff strategies, designing idempotent handlers so that retrying doesn't duplicate data or actions. Developer patterns. What patterns help deal with these challenges? Canonical data layer, a microservice dedicated to aggregation that unifies data, balances, transactions account info, so your internal systems receive a clean, consistent schema. Event-driven sync, using message buses, Kafka, RabbitMQ, etc. to process account updates in near real time. Polling is expensive and slow. Streaming is faster. Consent management service, store and track consent artifacts, OAuth tokens, expiration, renewal info so that SCA renewals or consent refreshes happen seamlessly in UX, sandbox, first testing. Always use official test environments, OB banks, FDX test suites before going live. Each test sandbox reveals quirks that surface later if you skip this. Real-world example, transaction aggregation. Imagine a personal finance management app. A user connects their bank accounts, some in the EU, some in the US. Here's how the flow might work. The user picks Connect Bank within the app. They're redirected, if required, to consent. In EU-UK, SCA may kick in. In US under FTX, token exchange may be more direct. Your aggregation service fetches raw JSON payloads from each bank's API. Then your canonical model transforms those into a unified schema, date, merchant, amount, category, etc. An event-driven pipeline updates the user dashboard in near real time. The beauty is that downstream users, or the app itself, don't need to know which standard powered the data. It all looks consistent. To wrap up, account aggregation APIs represent both a huge opportunity and a real technical challenge. The rewards: seamless access to permissioned data, rich insights, new product lines. The hurdles: fragmented standards, inconsistent data models, authentication complexity. For fintech developers, success comes down to three things: building strong normalization layers, handling authentication and consent flows resiliently, and designing scalable sync pipelines. Done right, aggregation isn't just a compliance checkbox, it becomes a competitive edge. Thank you for tuning in with Oceano B. If you want to go deeper, check out our full article. And don't forget to subscribe for more tech guides, developer insights, and fintech innovation. Until next time, code well, stay secure.